Hello, everybody. I'm Dale Pinker. Euro's having a pretty negative day. It's acting like that may have been it. I am going to award Goldie with the Man Award for his short yesterday in Euro. I recall the candle he did it on. I think it was right here. Took a little heat. Excellent trade by Goldie. Canada continues to head up. Big call, 200. Looks like we have a weekly reversal occurring here, although the week's not complete. Potential weekly reversal in USD CAD. Yen's making a stand at a higher low. Start getting back through 1350. We should have a continuation move. So that's what I'm seeing this morning. EG as well, back at support. It's going to be a breakdown under the neckline here. But into Draghi, who knows, maybe we could get something off this line here if the dollar sells off after Draghi. Otherwise, we're breaking down, headed to 75. But if we went up to this line on EG, it'd be about 78.14, halfway back of this. If that happens after the ECB. So something else I'm eyeballing. How's everyone doing today? Who's in the house? Tolson, hello. BW, Alien, Goldie. Everyone congratulate Goldie for his Euro call yesterday. I don't need to do that. Shoot. Here was Goldie's trade up here on this candle right here. Nice work. Hello, Khalid, Tosin. How are you? So Goldie's the man. Did you reach targets, Goldie? Hello, Roland. So you think that was it, Alien, or we get another pop? Dollar's up pretty good today. Let's add some support here. Okay. There's Milan. Low Cyric. Tolson wants to sell oil on a pop to 37.5. Gold also is holding where it has to. We'll see if it does. It's holding on the 4-hour, the 50-day. So maybe we could still get this shot up in gold back up towards 1285. If we get there, yeah. Okay. Alexandros, how are you? So rallies now. Okay. So that was it in the dollar. Okay, that was it in the dollar. We basically had, a day and a half down from 98.50. So now the path is back up towards par from here. Is that the way it's looking to you? In the Dixie? So Goldie, are you in the house? Because you're the man. See, there was a point you said, I hope no one followed me. Yeah. So I hope people did follow you, Goldie. You're the man. Congratulations, Goldie shorted euro on this candle right here. 1050. So about 100 pip winner so far for Goldie. Congratulations, Goldie. You're the man. Who else is here today? Hello, Solo. Welcome back. Ali, how are you? Doug, Cyric, FX John, JM, Alien, Alexandros, Forex Pipper, Tosin, Roland, Vol guys back. How are you? Khalid, Ed Z, Mauricio, Mr. Ego, Abel, Duke, Jacks are Wiles. It did. It went to like 1080. It went to 1080. Everyone welcome Duke. It was a great area. It wasn't perfect, but everyone welcome Duke to our community. See, here's 1050. Went above it yesterday. Not by a lot. Oh, 1057. 1057. How are you, Vol Guy? Been a while. Hope you're doing okay. Mr. Ego, how are you? Everyone doing okay? So, yeah, just barely took it out yesterday. So what are everyone's pre-ECB plans? My plan is to do nothing until after the ECB. It's Terry, right? Breathing in and out, buddy. Yeah, that was a pretty short pullback. We didn't even get to 96 and a half, but halfway back. Looks this way. Thank you, Alien. Oh, I'm not even showing the charts. Here's Alien's look. Nice look, Alien. Goldie, you won the Man Award. We already gave you the Man Award for your Euro short yesterday. Scroll back. Congratulations. I pointed out the candle you got short on right here. And then you made a comment, I hope no one's following me today, when you didn't have a lot of confidence in the trade. Cheers. Hi, Sinatra. So they fade the action, Tosin, huh? Okay. Alexandros made a great crude call yesterday. If you notice, Alexandros, you were in the copy of our session yesterday. Gave you credit for calling the crude move. There's our maestro, Artem, the master guitarist, is here. How you doing today, Artem? So we're scheduled to speak to Boris today, Boris Schlossberg at FX Flow. Should be with us in about an hour. Yeah. How are you, Ali? Fab, how's it going? Nice to see you back here, Fab. Dion, how are you? JM, Forex Pipper, Roland's back. Ed Z. I also see a new handle here, Ron. How about a LAR welcome for Ron? Twins. Welcome, Ron. Yeah, nice call, Sinatra. That's right where I went to before it bounced, right? Nice to meet you, Ron. Hello, FX Praise. I retweeted your tweets yesterday. How are you today? So what we do in here, Ron, new handles, is we share our views of markets with screenshots. So far, we've only had one example today of Alien sharing a screenshot, but this is the best way to communicate our ideas. It's much more effective than text. So paint the picture. Let us see what you think instead of reading what you think. So Duke and Ron, feel comfortable to share your work. It's very safe in here. No one's rooting for you to fail. We're all captains of our own ship. So feel comfortable to do so. Well, Aussie yen's the strength. It has been the strength. It didn't quite get to the 86 target. I don't know. We had one little divergence. It's an I don't know for me, Artem. I guess you just have to manage it with stops over 85, right? If you're top picking it. Hello, Mihail. Hello, Stuart. Nice to meet you. Everyone, welcome, Stuart. You're long the guppy now? Okay. Yeah, he's looking for 65. Ricardo called it out. Thank you, Alexandros. Everyone thank Alexandros for his guppy look. Alexandros acknowledging it was Rick's analysis that led him to the trade. Oh, that was Sinatra. Okay. Thank you, Sinatra. How are you, Sirik? Oh, that was actually Sinatra. That's trading. That's trading, right, Ann? Right, Alien? Woulda, coulda, shoulda. Every day you could say that. If I woulda, then I could've, and I should've. I do it. We all do it. Oh, okay. Good one, Sinatra. So, what are the guesses for tomorrow? I really want. You're having PC problems? Okay, bro. My gut is to be flat for it. And if I miss something, I miss something. But my vibe is to be flat into the ECB. Obviously, the market's expecting something aggressive, pedal to the metal from Mario. Hi, Rick. Nice entry on the guppy. How are you? Okay. There's a triangle on the 4-hour Aussie. Let's see if I could find what you're talking about. You're talking about this right here? This one right here? Is that it, Sirik? Is that it? So buy dollar weakness tomorrow, sell euro strength tomorrow. Okay. Just call me a Kreskin. I'm a mind reader. I'm a mind reader. So that means the dollar goes down and the euro goes up. Right, Artem? Okay. What do you mean, Rick? Okay. I don't understand you, Rick. Not sure what you're saying. Okay. So then we should be looking to buy the euro on weakness, right? I know someone looking for 107. Oh, okay. Thank you, Rick. Hi, Mark. How are you, buddy? Welcome back, Mark. You know, we only have 2 drives here. Okay. So we should be selling the rally in the dollar, buying the break in the euro. Okay. Interesting perspectives by Eulerians. Any more technical views you guys want to share? Lowell, how are you, buddy? Stuart, welcome back. Good to see your handle, Fad. Hello, Roland. Okay, so got a kind of a right shoulder here. Then go back to trend. Okay. Anything and everything can happen. Thank you, Alien. I want to thank Alien for what he's looking to do. He's looking to sell a pop in the euro tomorrow. Thank you, Alien. I want to thank Alien for his look. Ricardo nailed the weekly, the low in the Canada this week. Nice work, Rick. Rick nailed this. Thank you, Rick. Goldie's got a look. So Goldie's looking for what you're looking for, Alien. Goldie's looking to sell the rally back around the same area you are. Oh, this is CAD. Okay. CAD back to 140. That's a nice trade from here. Nice look. What is it, daily? The daily. Thank you, Goldie. Nice CAD look. Possible target 140. Everyone thank Goldie. Don't fade Goldie. Everyone doing okay? Oh, I missed FX Praise's look. She had a nice look on the Euro Yen going to 119. Is this it? Euro USD to 106.70. And then eventually, yeah. Thank you, Praise. Ricardo's look, symmetrical triangle. Either way, a big move coming. Keep us surprised, Ricardo. Everyone thank Ricardo and thank FX Praise for their technical views. Rick's view of pound Kiwi and FX Praise's view of Euro USD. Thank you, Larians. I can't keep up with you guys. Our Tom has a look in pound Kiwi, Kiwi Yen. Yeah, this looks like a better short than the Aussie Yen because Aussie's been stronger than the Kiwi. Nice look, R10. Looks like we have to get through this 76 level for it to work. Thank you, R10. For those of you that don't know, R10 is a great guitar player. Thank you, guys. You guys are great. Rick Rock. Rick Rock. Everyone take a bow. You Larians are the best around. Larians take a bow. Larians take a bow. Solo, how's it going with you? Ali, you're quiet. Mahal's back. BW. Okay. Mr. Ego, hope you're enjoying your time you're spending here with us in LAR. Tico, long time, buddy. Tico's in the house. Everyone, welcome back, Tico, our three drive expert. Yeah, Mark, scroll back and take a look at what Goldie's looking for 140 in Canada on his daily chart. Scroll back and look for Goldie's. Goldie, want to post that for Mark again? Your daily view on CAD. Everyone's bias is short. That's a problem. That's why I'm having a hard time with it. Everyone that missed a Jan decline in the S&Ps are licking their chops. Oh boy, I get another chance to short it. I don't know. I'm conflicted on it. You know what I mean? I'd rather see him just squeeze every bear and make a new high over 2130 before I start to get bearish. I don't know if that's going to happen or not. You're welcome, buddy. Well, it'll be a long and winding road. There you go. There you go, Mark. Do you, Sinatra, like over 2100? I know some Ellioticians are looking for 22. Okay. Well, maybe we will. Another new all-time high, Sinatra. Well, if the Dixie's going above 100, I know. That's what I think. 2020 to 2040. This was your Canada, right, Goldie? Thanks for reposting it. Here's another either or from Ricardo. Either or. One more drive up here at 3.5 or down to 41. Got a little triangle here. Thank you, Rick. And thank Rick for his cable view. Okay. Okay, 2050. All right. So you're going to stop yourself in, Rick? It's okay, Ibby. You have a note? So you'll stop yourself in to the pound? Buy stop, sell stop for entry? Okay. So interesting for those that are new that Rick trusts his charts enough to initiate positions with stops, letting the market take him into the trade. And Ibby, if you don't have a note, I think we're going to have to put you in large attention for about a half an hour. I don't know if Ibby brought a note, but if not, you may have to go to detention. FX praise. Likes Goldie's call in Canada. Same targets. Yeah, 140. Yeah, back above this double bottom. Thank you, FX praise. So there's some confluence between what Goldie sees and FX praise sees in USD CAD. That's usually a good sign. Thank you, praise. So who's happy to have FX praise back with us and sharing ideas? Give me a Y if you do. I'm certainly glad to have you back sharing your work with us, FX praise. Give me a Y if you guys agree with me. Where's the E attachment? You're okay, Abby. I'm just teasing you. So we have a lot of people sharing their excellent technical work with us. It's not just a couple anymore. A lot of new people stepping up to show their charts every day. Because they know if you want to be a star, you got to show your charts at Mar. Jake is in the house. Everyone welcome Jake. Welcome to LAR, Jake. Tico, how are you? Good to see your handle here. It's an interesting observation. Okay. So Tolson thinks we might be start to sell off in the crude here. It's kind of an ugly candle. Well, we headed down here. There'll always be another trade. Aussie Kiwi still working on the breakout. So it broke out and it's following through. Nice call, Rick. You've been on top of this one for quite some time. Yeah. Triangle. Thank you, Ricardo. Okay, Goldie. Thank you, buddy. Okay. Everyone doing all right? I'm going to take a 5-minute break. That's what I think, Alien. I just have a heart. I have to think there's more left in this euro here. It looks incomplete to me. This is a 4-hour. That's what I think is going to happen. That would take us down to 96.5. 96. Thank you, Alien. Okay, guys, I'm going to take a quick break. I'll be back in 5. Yeah. Thank you, Alien. That's how you get your 1960 in the S&Ps. Okay, then I'm going to take 5 minutes now. I'll be back in 5, everyone. You could continue to collaborate. You guys don't need me. I'll see you tomorrow. Just kidding. I'm back. Yeah, broke down. Thank you, guys. Nice look from Alex. There's Sinatra's view at 36.15. Thank you, Alex and Sinatra. Thank you, guys. Armand in the house. How are you, Armand? See what Armand's thinking here. Euro Aussie. Buyer under 44. For maybe a third drive up here, huh? Great to have you back, Armand. Thank you, buddy. Everyone thank F4XR, which is Armand, for his Euro Aussie potential trade. Thank you, Armand. I miss Armand when he's not around. How about you guys? If you miss Armand, he's not here as often, give me a Y. There's my Y. Always miss you when you're not here, buddy. It's like Hotel California. You could check out, but you can never leave. Okay, Armand's going to fire him at us now. Okay, Armand's not looking for as much on the upside as Goldie was and FX Prey, but he's looking for a little lower level. Back to 36. Maybe back here, 38. I like this. Maybe we get a back test. Would come in around 38. Thank you, buddy. Thank you, Armand. Thank you, Tosin. I like this one, Jax. Jax likes the long side of euro pound from support here. Up here. I concur with this one, Jax. I was thinking we could even go 78.40-ish. Thank you, buddy. Everyone thank Jax for his live trade call of long euro pound here. Stops under the low. Everyone wish Jax good luck on this EG call here. I talked about it at the beginning of the session, how we're holding support here, right here. And we could come off this third drive line up here. Hello, Jake. How are you? Jake showing us a look. This the first time you'd screen shared, Jake? This is the crude. You're showing it above the trend line. Headed up towards 45. 41, 45, 49. So it broke out of the rising wedge, is what you're saying. Thank you, Jake. Nice look. Everyone thank Jake for sharing a trend line breakout, which was also falling wedge in crude. So thank you, Jake. Second time? Okay. Okay, this is your 4-hour triangle. Looks like a 3 driver too. Thank you, Sirik. Looks like you're looking for 75, 40-ish. 75, 45. Thank you, Sirik. Everyone doing okay? Boris should be with us shortly. Everyone doing okay? Okay. So Boris Schlossberg should be with us shortly. Okay, Dion. Everyone Everyone okay? Day before the ECB. Everyone welcome Russ back. Russ T1. Welcome back, Russ. I see a new handle, Voyager. It's a voyage, not the destination. Everyone welcome, Voyager. Fresh off the Star Trek Enterprise, Starship Enterprise. Everyone welcome Voyager to our community. A lot of news here. Euro's reversing, gold is next. Dion saying. That'll help Jax out on his Euro pound call. Okay. Stick around for Boris Schlossberg coming up in about 10-15 minutes. There's a welcome for you. So new handles in here. If you just scroll back or take a look at here's Cyric's look at the 4-hour USD CAD. This is what we do in here. We share our ideas through technical views, a lot of different methods used in here. Cyric does a lot of harmonic work. He showed the bullish white swan last week that worked in Euro. He's showing the same thing here. Positive look in USD CAD, harmonic, bullish white swan, a la Cyric. Thank you, Cyric. So we have some bullish looks today in USD CAD coming out of LAR. We actually had Ricardo call the bottom on Monday. So nice work, Larians. Thank you, Cyric. So LAR wasn't surprised. LAR wasn't surprised by this pop in Canada. Thank you, Sinatra. You're a crack reporter. Thank you, Cyric. So I keep an eye on when there's more than one view that agrees in LAR on an outcome using different methods to come to the same conclusion. I give those trades heavier weight. Give me a Y if you understand that. So some of the very good traders in here, when they're all saying the same thing, more than one of them, and for example, Cyric uses harmonics, Praise uses pretty standard. Okay, Armand's pointing towards that short area, which Cyric showed on a triangle there. So do you guys get it? Give me a Y. If you see a few traders in here that come to the same conclusion, target-wise, path-wise. Okay, Dion. Good hunting on your Euro long here, buddy. Everyone wish Dion well on this trade, as we wish everyone well on all of their trades. But you guys, Alien, you get my point. Hi, Ron. How are you? What I'm saying, to me, that's confluence of different methods pointing towards the same outcome. So even Armand's looking for a pop back to 36. So we've had 4 people with positive views on USD CAD, and they left rates unchanged. And we're getting a little pullback here in USD CAD. Could be a decent place to consider a pullback. Back to 3.5. And Dion's taking a shot at the long side of Euro in front of the ECB. Looks like it's holding this 109, 110 support, 109.60-ish. Everyone doing okay? If Lara is adding value to your trading experience every time you're in here, has helped you become a more effective trader, has opened your eyes to more ideas than you could see on your own, has made you better, give me a why. It's made me better. Here's my why. Stick around for Boris. So Dion's getting a pop in the Euro here. Pound doesn't look done either. Maybe we should wait for this. We're diverging pretty nicely up here in Aussie. So I think there's a short in the Aussie and we get a higher low in CAD. New high in Aussie, higher low in USD CAD. May not be complete. Let's look at some fib retracements here. We went to the 50% retrace in Canada right there. Not saying we can't trade 61.8 back at 33. But that's halfway back there in USD CAD. Give me a Y if you see it. And remember, Cyric has a bullish white swan from the lows. And we have Boris Schlossberg coming up here in a few minutes. Good hunting, Mark. don't think he gave an entry before the number. But getting a nice little tail on the Canadian here. Stick around for Boris Schlossberg. I think we got him here. Welcome back, Boris. How are you?
Hey, how are you? Sorry, tons of noise today, everywhere. Squawk box in the city. So my apologies. I don't know if you guys hear a lot of the ambient noise, but it's just New York.
Okay, New York. If you're in the live room, you may want to mute it because I'm hearing myself echo.
Oh, sorry.
If you have the volume on in the live room, now it's off. Good. So how are you, buddy? How's it going, Boris? No, I can't hear you.
Okay, can you hear me now?
Can hear you now, Boris.
Okay.
How are you?
I'm good.
Thanks.
Are we getting any feedback here, or just?
No, not anymore. I was hearing an echo before. Maybe you had the volume on in the live room, but it's fine now. So, welcome back. Great day for you to be here. One day ahead of the ECB. Have caught a few of your appearances on CNBC. You were growling like a grizzly bear on one of the occasions, saying this is the year to sell rallies. Believe you're referring to the S&Ps. What's your view on what could happen tomorrow, and how are you looking to make it actionable after the ECB and the Draghi press conference, buddy?
You know, the ECB is going to be a tough call because so much is already expected. I mean, the market is looking for a negative cut to around 40 basis points. The really open question is, are they going to do QE? I don't think actually they're going to do QE. There's a lot of institutional resistance to just kind of, pump out money into the system. But having said this, though, wait, Del, are you there? Okay. Having said, so let's say they don't do QE, and then you have a knee-jerk bounce in the euro to 110, 110.50. I'm still very much long-term bearish euro for a whole host of reasons. So, if we get a bounce off of the euro tomorrow on any kind of presumed upside surprise in ECB, it's just going to be a better opportunity to short it around these levels. I like shorting it around these levels on a long-term trade. Anywhere above 110, I think is going to be a great short here for the rest of the year, because I do think there is not an insignificant chance that we certainly can get down to 105s, and there's a possibility that we can go down to parity for a whole bunch of reasons.
Okay.
If you want to go, yeah.
Okay, yeah. Let's hear the laundry list.
Well, so the most obvious laundry list is just interest rate. That's the word I'm looking for. Mispricing. Given where U.S. rates are, given where European rates are, the euro should be much, much lower. The only thing that's keeping it up, I think, in many ways, is market's negative view of the Fed, that the Fed is just not going to hike rates, that they sort of paused on the hiking rating scale, and two, that Europe still sports a very, very positive capital account. The Germans continue to basically export their way out of trouble, but I think that piece of it is going to become more and more problematic, because Germany's biggest export markets were China and the Middle East, aside from us. I mean, they'll keep exporting to us, but that alone is not going to make up the whole juggernaut that they are used to. So the Middle East is dead.
Weaker demand coming out of China and the Middle East, with low crude prices up until recently, some stability there. Not the same type of buying power for European goods. No.
And I think you're going to see, month on month, quarter on quarter slowdown. So their capital position is going to get eroded. The other big thing to watch, to me, the weakness in the euro is really Germany. Everybody else around Germany is a basket case. Italy literally is a basket case at this point. I keep, everybody keeps listening, if you're listening to Squawk, every morning that Italian banks are limit down, limit down, limit down. And we're all ignoring the fact that basically the Italian banks are literally bankrupt. Now, Italy is no Greece. Italy is the third largest economy in the Eurozone, 125% or 130% of GDP. $5 of every dollar that they raise in taxes goes to nothing more than just paying interest. To me, Italy is teetering on the edge of collapse. And if Italy goes as a sort of a black swan event, it's a very, very negative event for Europe. But the fundamental thing to keep an eye on is just the slowdown in German activity. German industrial production and factory orders, unemployment. You start to see German unemployment start to pick up. All those things are going to force the ECB to become a lot more aggressive. The ECB basically acts at the behest of Germany. If the Germans don't want to do something, it's really hard for Mario Draghi to get it done. But the moment they get into a weakened position, they're always let's print money. So I think for all those factors, you have a preponderance of risks to the downside in the euro. Fundamentally it's one of the cleaner trades that you have. And then if is that the euro chart you have up right now? What are we looking at right now? No, it's not.
That's a 4-hour euro.
Really? No, it looks like pound right now. Or is it my pound quote or is that the euro?
Yeah, it's 109.76 last 4-hour euro chart.
So let's just pull up the dailies. Just let's go up a little bit wide.
You got it.
So the thing with the dailies that I think is interesting is that, if we start failing of it, there's no doubt this 108 is a really strong support level, and it would take quite a lot for it to break it. If we break 108, it really puts us on path up to 105 quite easily. But if you look from the top side, what you see here on the top side is a failure at lower highs continuously, right? We fail over here at what is that? That's like 115. We fail at around 113, and if we fail over here, if this is sort of the intermediate term high here, the sequence of lower highs really gives you a lot of confidence that the bearish trend stays in place. So to me, unless the euro starts to take out 1400, and this whole thing turns itself around to kind of a bullish posture because you have higher lows, you gotta just sell the rallies here in many ways. It's
okay. So to me it looks like, and I could see, we had that peak at 117, we had another peak at 114. That so far we've retraced from the 108 level, maybe about 38, not even halfway back yet. So we could even get a move to 111, 112, and that would be a shorting opportunity, wrong over 114. And then back under 105, back under 108, basically that was close to a 500 pip break from the near 114. That could take us down to your 105, 103 level.
Yeah, it does. Yeah, exactly.
Okay.
Then everybody starts talking about parity, and you may get just momentum down to parity. But I think it's reasonable to target 105 as a longer-term target for this year. Do
you think it's possible? I know the Germans have been against, like you said early in the interview, about QE and just throwing money at the problem. But the fact that Deutsche Bank retested, even took out the 2008 lows, may change their mind.
And I haven't even started throwing that whole mess into the equation, because Deutsche Bank basically has $75 trillion worth of debt, of derivatives on its books. Now, yeah, they're notional and they're offset against other counterparties, but if some of those counterparties are weak, even if some of those counterparties are Chinese, you really don't know. If some of those counterparties are Italian, there's 100 different ways you could slice that apple in a very, very ugly fashion. So Deutsche Bank to me is a problem that's just not going to go away. There's just they have too many debt outstanding. I'm sure they're desperately trying to paper over a lot of their stuff. I'm sure they're trying to dump as much of the derivative garbage that's on their books as possible. But at the same time, you have a $75 trillion book. Nobody on the street is going to take that off your hands. And that creates, I think, even more problems. And they are effectively, as far as their balance sheet goes, really undercapitalized. So that's a very, it's a dangerous position to be in as well. So yeah,
Can
I
I
mean, yeah,
Okay,
go ahead.
go ahead, Boris.
No, go ahead. I'm done.
Okay. Perhaps we could switch gears. We've had recoveries in commodities. I'm looking at the Aussie. It's had a great run, but to me it looks like this run might be close to running its course. Here's your daily. You had your breakout at 72.5, and the measures maybe 77. You have a different view on the commodity currencies. Crude broke yesterday. Canada held major support at 32. Do you think that commodity currencies can pull back if this commodity rally falters,
Yeah.
or do you think crude is bottom?
Hard to say. It's
There's a lot of that going on today for me. Hard to say.
Yeah, I mean, it was definitely hard to say. I mean, do you want to get in front of Aussie right now? It could be a great trade, but you got to be willing to hold till 77.50. I mean, it's a big short. I mean, we're short Aussie on a long-term basis because I think China collapses and Aussie goes back down to 70. I also, I don't think the RBA is going to like seeing Aussie 75, 76 because whatever rebalancing they've had. And I generally think that basically Australia is another head fake. They had rebalancing. Their consumer and services sector is definitely doing better than you would be led to believe, given the fact that they've just had a collapse of all of their demand. Iron ore prices have gone through the roof over the last couple of days, but all of that is a function of the fact that the Chinese were simply incredibly short supplies into the Chinese New Year. That it's all seasonal. There is no organic demand. They're not building any more frigging buildings in China. They're not building any more frigging highways in China. They have overbuilt themselves probably for the next 10 to 20 years. Completely overcapacitized themselves. And that just tells me that the demand for Australian commodities is going to taper off significantly. That leads ultimately to layoffs and bankruptcies. We haven't seen that. We haven't, they've been able to escape the bankruptcy issue, and the jobs numbers have finally just started to crack this month. We have 2 or 3 months of negative job numbers. All of a sudden, you're not going to hear the RBA singing the neutrality tune. They're going to start thinking about lowering rates. That's going to take Aussie right back down, I think, towards the 70 mark. But it could, in the meantime, the short squeezes can be pretty brutal. So yeah, I mean, the chart basically tells you 70, 75 to 77 is the next resist zone. Shorting against that position makes a lot of sense, but it could be a lot of pain for sure.
How about Canada? We've had a nice bounce off this 32.5 level. BOC left rates unchanged. We're getting a pullback. Is this a break to buy in Canada? We had about a 200 pip pop. What do you think?
And again, it's one of those things where Canada could break 30 before it finally bottoms out. In other words, oil, it feels now. I said this the other day actually on CNBC that rarely do you have V-shaped recoveries in commodities, right? Unless you have a supply and misadjustments, right? In other words, you have massive undersupply, then massive oversupply, and things go back and forth. But I had forgotten really a very important point, which is that commodities have nothing to do with commodity. They have nothing to do with supply and demand, especially oil. Oil has nothing to do with supply and demand of oil. It has everything to do with speculation. What do we trade? We trade about 1,000% more of paper than the actual underlying commodity at this point, maybe even 2,000%, meaning that for every real barrel of oil, we trade 20 times more paper. So
good point.
When you view oil the same way you view the euro, the same way you view the S&P 500, that is a financial product completely divorced from any reality, right? Then you have to trade sentiment, and we all know that sentiment is much more V-shaped, right? So can we squeeze out to 40 in crude? Yeah, I mean we could. I do think that the real money will probably going to come in and be happy to dump whatever they can at 40 on the market. But if we take ourselves up to 40, the dollar Canada can go down to $1.30.
Yeah, it could.
So again, I think the way to trade all of these things, if you're on the opposite side of them, in other words, if you think that these are exhaustible moves,
Well, I
is
think we could go to 130, but I think we could get back to 136 to 139
right.
first.
Well, what I'm saying is, since it's so volatile and it's so hard to trade the commodity currencies, given the volatility of the underlying assets. The only way to do this reasonably is very small size, scale down. So in other words, you put your toe in the water here at 32.50. You come in at 31. You come in at 30.50. You come in at 30, and then you put a hard stop right at around 28 or 28.50. Like if you're at 28.50, so you're just completely misdiagnosed the issue. But that requires lots of small entries, lots of pain absorption, and a lot of patience to have the whole thing turn around. Because
So do you do that on a lot of positions, Boris, where I'm a big believer in reduced leverage. One of my expressions is, if you can't be wrong for a day, how can you be right for a week? And the way to be able to, the way to withstand algos and black boxes is to dramatically reduce your leverage, so your stops are wider, and you build a position.
Yeah, I mean, I wholeheartedly agree with your philosophy. I don't trade long term, but I do practice the exact same thing that you preach on a shorter term basis. And we day trade all day long, and my sort of target is 10 to 15 pips per trade. We try and do 5 to 10 trades a day, but every single trade that I do is never more than cash on cash, meaning one-time equity, right? So if I'm doing 10 trades, first of all, I'm never going to have more than 2 or 3 trades in the market at the same time, but that means that my maximum sort of lever exposure is 3 times equity. So you're absolutely right. If you can't be wrong, I guess the way I would translate it in my world is, if you can't be wrong for an hour, then how can you be right for a day? Right?
Yeah, I like that. Okay. All right. So I know that from what I heard on CNBC that you think this is a year for selling rallies in S&Ps. So I guess a linchpin would be U.S. dollar yen. I'll put up the daily. We had this double bottom at 111. Everyone's looking to get short at 116. That was a breakdown of U.S. dollar yen. And one thing that bothers me, and I'd like to be short for the next wave down in S&Ps, Boris, but the whole world wants to sell this rally up here. Even if we go to 2030, 2020, 2040, SPX, because they missed it in January. Okay, so they missed it in January, and now they're licking their chops and going, wow, this could be a secondary top. It could be a failing rally. Do you think there's a possibility, knowing how Mr. Market is so mean and doesn't want to accommodate hardly anybody, that we print a new high in the S&Ps and shake out every bear before we have a break?
Well, before we have a break, that then just takes out everything you've earned that whole year, right?
Yeah.
I mean, I think that could very well be the story this year, is that we do spike ourselves up to a fresh high. Everybody and their mother gets on the bull train wagon, even though it's 8 years old and it's older than most of the Social Security recipients, and at that point the rug is pulled underneath everybody.
Okay, so that would imply, here's what I think. Everyone's looking at the weekly chart. I'll put it up on the end. We had that breakdown at the 116 level, straight line breakdown, your neckline, whatever you want to call it. And in my experience, when everyone's looking for one number, it either doesn't get there, or if it gets there, it's like a hot knife through butter, where we could have a rally back towards 118, 119, 120, and that would most likely, since the U.S. dollar yen hasn't done much off the low, if we had a rally back up towards there, that might sow the seeds for over 2,100 in the S&P. What do you think?
It's possible. It's definitely possible. I mean, I think the problem is that these are very long-term prognostications that are just impossible to make at this point. All you can say right now on dollar yen is we're holding bid, right? I mean, we're holding this 111, 112, and if you're positioning for some kind of a bull move to the upside, you got really great risk reward parameters here. You got a decent
Right.
technical structure, and you want to just you want to buy every dip. We've been trying to buy the dip. We got stung a little bit. We bought it too. We did well. Yes, last week Kathy bought too early. Now we're sitting here floating this thing, but it's finally moving our way, back out. I think the universal rule this year is whatever it's like the rule about business, right? You're looking to start a business and you have a certain budget, and they always tell you double your budget and double your time for when you think it's it's going to be real, and that's probably like the best realistic case you have. So same thing with trading. You have a thematic view one way or the other. Double your stop and double your time and half your position, and you may be able to survive your thesis properly. It's just that kind of environment in the marketplace. You have to have large margin of error here to succeed this year, I think.
Okay, and what changed it? Because I mean, volatility levels don't seem to be that much greater than they've been in past years. Is it just?
It's deceptive because what happens is look at the yen. You have like nothing, 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 and then you have boom, 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 boom. Literally, 3, 4. I mean, yen did 800 points in 7 days. It hasn't done 800 points in 7 months.
Good point. So when you look at the yen, you have that. You look at the euro, you don't have that.
Yeah.
You had it in cable. What's your view on Brexit, buddy?
Oh, we've been going back and forth in my chat room on this all day long. Actually, I don't know if you saw my tweet. I had this thought this morning that is the Trump phenomena the same thing as the Brexit phenomena? And I think it's kind of true in a sense that both political positions from a rational point of view are utterly idiotic. I don't, you can argue with me all till blue, till you're blue in the face, but there is no good reason for why UK should leave the EU. There's really no good reason for why Trump should be president. But here's the big but. They are speaking to the populist idea. People are tired with institutional malaise. People are really, really tired with failed, corrupt politicians. And it's kind of like throwing the baby out with the bathwater, or
it's kind of like the 30s, where you have the right and the left rising.
Right.
Because people are angry. Didn't Shakespeare say, when the coffers are full, people want a democracy, and when they're empty, they want a dictator strongman?
If he said that, that was probably one of his better, more astute political points. But I think that's what it is. I think people are just you have this really serious frustration, and arguing reason.
Are you angry? Are you angry about people being angry, Boris?
No, I mean I understand it. I mean I understand I totally understand people's frustration. I really appreciate all of my UK members it's kind of my group is kind of very split between those that think it's the stupidest thing in the world to those think that it's the biggest, the smartest thing in the world, to leave EU. But I do see their point of view. They're paying all these taxes. They have faceless bureaucrats out of Brussels, telling them what to do. It's what you're seeing, unfortunately, and this is sort of we're coming to the cusp. What I think is a very dangerous time in Western democracy. Period. We've had this since the breakdown of the Berlin Wall. We've had a tremendously positive, virtuous cycle of unification, right? Unification of culture, unification of economies, unification of mores, which allowed a guy from Belgium to travel to Spain and a guy from Spain to sell his services in UK, and essentially Europe to become a mini America, and Europe and America start to trade with each other much more, and it's just this whole amalgam of unification. Basically, everybody becomes the same, right? So that's a great thing, because everybody becomes the same. We all have the same laws. We treat each other nicely. Nobody fights with each other. The argument is that no country that has McDonald's ever went to war with each other. I think it's actually a bullshit argument. But the point is, it's much, much better. But the flip side of it is, everybody has to give up their individuality and their culture. And I think what you're seeing here is this incredible anger at the fact that your individuality is subsumed towards the greater good of society. That's a universal conflict we've had in the history of mankind. And it always ends badly because the desire to express your own individuality usually ends in fascism, and and I really hope we don't go that way. But
okay, so talking about history, historical money is shiny and yellow or silver. So I put up the gold chart here. Druckenmiller's looking for 1400. Goldman's saying yesterday and have reiterated there's still negative gold in the metals and commodities.
Yeah, well,
what do you think of gold in here, Boris?
Gold is my number 2 strongest thesis. I like gold. I think gold, and I'm not hardly a gold bug, but I think what changed this year that is a fundamentally positive driver for gold.
Negative rates.
Negative rates. Negative rates. You got it.
Yeah, because you and I are from the old school, and the bear argument all these years was opportunity costs, no yield on gold. You had to pay for storage. So negative rates eliminates that opportunity cost.
But yeah, not only does it eliminate it, it actually makes it highly competitive against cash. What is your opportunity cost if you're in a Swiss franc? You drop 1,000 Swiss francs into your bank account, you get 990 francs back at the end of the year. You do that for 10 years, suddenly your 1,000 is worth 900. You haven't done a blessed thing. At least gold, you hope that 1,000 is worth 1,000, that it was before. And I think the flip side of it is, of course, the 1,000 is worth 2,000 because everybody is doing the same trade, which is I don't want to be in cash, I want to be in gold because gold is the new cash. So I like gold. We have a long-term bull spread on gold, and that's my number. My euro short, gold long is my 2 top trades for this year. Let's see if I'm right.
Okay.
But
interesting. So what do you think for the Fed next week, Boris? And do you think there's a chance that the U.S. also, in desperation, moves to negative rates, or
no,
is it possible?
it's way too early. First of all, labor markets are pretty decent still, right? I mean, we are kind of hanging there. Labor markets are pretty decent. The Fed is certainly not going to go negative or even cut rates. The Fed is going to stay stationary, and they're going to play footsie with the market. They're going to say, hey, we're going to think about possibly hiking rates because things are not as bad as everybody thinks, and we don't give a shit because we're an island nation. And, we're not as affected by China and Europe and everybody else, and here things are pretty good, and we're going to just create a monetary policy for U.S., not for the rest of the world. This is just all propaganda to keep the market believing that there's a potential for a rate hike. Basically keep rates relatively tight. They really don't want to see deflation. They don't want to see European deflation, imported here. So they got to play footsie with the market and try to BS us into believing that they're going to hike rates. But no, I don't think they're going to hike rates. I think they're going to stay stationary and hope and pray that China stabilizes, that oil kind of basically maybe crawls itself back up to 40, so they don't have any bankruptcies across the oil patch. And we chug along at 150,000 jobs per month. If they could get that, then they maybe they breathe a sigh of relief. Although here's the thing, how much time do they have left? If they would they be so politically tone deaf as to raise rates in September? I don't think so, right?
They'd have to go, if they're going to do it, they have to go in June, don't you think?
Right, they have to go in June. And even if they go in June,
the S&Ps are above, and if the S&Ps are above 2,100 going into the meeting, that would give them cover, wouldn't it?
Even if they go in June, right, and then the economy starts to tailspin for whatever reason, and summertime is always kind of a tough time in the financial markets, right? And we come into September, and it freaking the market is down 2,000 points. Dow's down 2,000 points, S&P down 200 points, and the Fed had just hiked in June. How much heat are they going to get from the Democrats that they're basically giving the election to Trump? I think there are extraneous factors that affect the Fed. People never look at them. People always underestimate the political variables that underline monetary policy. And I think those variables are going to just become a lot stronger. So the chances of a Fed hike, I think, are smaller than people think.
Yeah, for political reasons.
Yeah.
Into an election year. Although Greenspan tightened into an election year that knocked the first George Bush out of the box.
Right. And you think Yellen doesn't know that model, and you don't think
Yeah.
they're going to be really cognizant of that, and I think first of all, I really think they're petrified. I mean, maybe they're not. I mean, I don't know, but I really do think that almost everybody on the Fed board is scared witless of a Trump presidency. So I don't think they want to do anything that would create that.
Does Sanders have any shot? Or does Hillary have it locked up in your view?
No, I don't think she has it locked up. The problem with Sanders is the strongest candidate of the Democrats have running, period. Sanders beats Trump by double digits. Sanders is the single best candidate, period, in the whole field. He has the highest likability numbers and everything else. The problem with Sanders is his economic plan really is unrealistic. I mean, what is it, $15 trillion worth of taxes? If you look at his tax rates, they look good on paper because it looks like he's raising taxes on very rich people, but he's actually raising taxes on what I would call the top 20% truly upper. In New York City, $250,000 is, I know it sounds insane, but $250,000 buys you a studio apartment. You just can't. In San Francisco, the same thing. There are pockets in this country where $250,000 is just enough to get by. I know that sounds insane to everybody else, but that 10% of the population for whom $250,000 is just to get by is also the most productive part of the population in terms of the GDP growth. So his tax tables have to be completely redone. My frustration with Sanders is if he changes his policy and says, I'm not going to raise taxes too much. I am going to raise taxes, let's say, on $5 million and up, but I'm going to take all the money from defense and put all that money into healthcare. In other words, there's no reason for why Americans have to pay $1 more to get a lot more for their money. We could cut the defense budget by literally 50%, and nobody would care. Because the interesting thing I think about politically this year is that neither the right nor the left want to go anywhere. Nobody wants a war anywhere. We don't care. We want to go back to being an island nation with 20 zillion nukes. You want to come to us, we'll nuke the crap out of you. Otherwise, we're not going anywhere. Why do we need $1.5 trillion worth of defense? We don't.
Well, I would say that the Chinese and the Iranians firing missiles after, and the Koreans, and definitely understand that we're moving towards an isolationist policy, don't you think?
Yeah. And honestly, who cares? The Chinese, they got 20 years to catch up. The Chinese are going to be basically bankrupt whether we do anything on the defense side or not, because they got a lot more economic problems, on their side. We have a big enough Navy, big enough a nuclear arsenal, big enough everything to project ourselves. We basically can just drone ourselves into complete defense at half the cost. So if you take $500 billion out of defense and turn it and create a healthcare system without raising anybody's taxes, you have a winning platform on both left and right. If Sanders is smart enough to figure that out, he has a real chance. If he's not, then we're stuck with the clown show.
Okay, well, I'd like to wrap it with a question that I get a lot, and I ask other people a lot, and you brought it up that you need 100, 200 grand just to be middle class in New York, or lower middle class in San Diego or San Francisco. And people say to me, Dale, could I trade for a living with 10K? And I say yes, if you want to live beneath an underpass. What do you say? What do you say, buddy, when people ask you that? A lot of people turn to trading because perhaps their other occupation went away and they're looking to replace it through trading. I also tell people it's always better to have more than one income stream, because if trading is your only income stream, it puts that much more pressure on you to perform, and we all have drawdowns. What do you tell people, and I'm sure you get asked that question, how much do I need to trade for a living?
Yeah, 100%. 100% on your page. It is better to work the night shift at McDonald's or to work the day. The great thing about trading, by the way, right, especially us in the FX market, is that we don't have to. We can hold a job and trade completely cleanly. You can trade Asia, Europe if you want to do a day job. You can trade US if you want to do a night job. It is much better to work a shift at McDonald's and know that you have $400 worth of whatever income coming in every single week or whatever the hell you do. I'm just
Yeah. I even use rich people's example. For example, Richard Dennis, who was a legend. He also had C&D Commodities, which threw off plenty of cash for clearing floor traders. So even the rich know that you need to not just depend upon your trading income.
Listen, almost every trader I know, when they get smart, set up a brokerage house, either internally or externally. And why do you think they set up a brokerage house? Because they want non-volatile commission income. They want non-volatile income. Everybody wants. The key thing with trading is that you need non-volatile income. Non-volatile income means that as long as you show up for work, rain, snow, or shine, you get paid. That's not the case with the market. The market doesn't care whether you show up for work or not show up for work. You don't get paid. Okay, you don't get paid for punching the clock. You get paid for being.
You also have deductions from your paycheck in trading. Big deductions at times.
That's what I'm saying. None of you not get paid, but you get punished. So you need. I really do think you're absolutely right that you need some sort of a ancillary stream that is non-market volatile. It will make your job a lot easier. And the point is that I think what happens is people always think that they need to make all their money today, right?
Yes.
One of the things that we sort of do in our room, and this is the exercise that we constantly follow, is let me just make sure I just get the numbers correctly. Hold on, 4 times 12. Yeah. Okay. So if you want to make 10 times your money, right?
Yeah.
You're never going to make 10 times your money just by have a hunch better. But I mean, you could take 10,000, make 100,000 on one great euro trade, but I guarantee you that the next euro trade you make, you're going to lose it all back and more so, right? Have a hunch, bet a bunch is never a good strategy, to make 10 times your money. But you could make 10 times your money over 5 years. 5 years. If you compound it at around 40% a year. Now, 40% a year is an incredibly hard number to get. But
hedge fund managers last year did a cartwheel doing 10-15%.
Exactly. But at 40% a year, that breaks down to essentially 50 basis points, 40 basis points a week, right? That's what we focus on. I mean, we focus every single day, every single week on tiny amount of money that adds up week in, week out, week in. The irony of the whole thing is that everybody comes in for a lottery paycheck, and the reality of trading is it's just a job like any other job where you collect your paychecks and you slowly stack them up over a long period of time. The way people get rich for real is by compounding slowly.
Great point. That's a pearl. Compound slowly.
Yeah.
That's going to be in the report. I want to thank you again. It's always great talking to you, Boris. And everyone, Boris and I share the same birthday. So we're both schizophrenic. We both have multiple personalities. Do you have a dual personality, Boris? Have you noticed that there's more than one side of you, and do you take medication for it?
No, I have unfortunately never had to take medication. The older I get, the more I've been able to temper my evil twin personality. I've managed to really control my what my kids say. You only have two. My kids always say I only have two buttons: normal and nuclear. So I don't.
Oh man, that's great, Boris. great to have you here again today, Boris. Thanks for a lot of great insights and views on the markets. And if I don't talk to you by May 27th, happy birthday, buddy.
You too, my friend. Thank you so much for having me. Great to be with you guys. Everybody enjoy, and happy trading to everybody.
And can follow you at FX Flow on Twitter, and your website is at bkassetmanagement.com.
Actually, it's BKForex, BKForex.com.
BKForex.com to follow Boris and Kathy, the dynamic duo in the FX world.
Thanks a lot.
Thank you, buddy.
Bye-bye.
All right, man. See ya. Everyone, that's Boris. I'm going to have to do a quick wrap-up, guys. I can't show any more charts because there's someone behind me. So I'm looking for another push up in the gold here. I'm looking for another push down in the dollar. Going along with what Boris said, we should be looking for rallies to sell. Maybe it's going to come in maybe around this 111 level, 112, but I just can't get bearish the euro just yet. So we'll see what happens. 111.50. I actually had a third drive line coming in here. It's kind of stretched out now, but up here just off these two highs. Let's see what happens if the euro gets up towards this 111 area, 110.80 level. 110.80 was a pretty important pivot point. So if the euro heads up towards this 110.80 level on a disappointment by Draghi, that may be the time to do it. Okay, thank you, everyone. Great contributions today by everyone. I want to thank you individually. Okay, I want to thank Tomas and Ricardo and Dion and Doug and Ali, Sinatra, Ibby, BW, FX John, Alien, thank you for your looks today. Russ, Mark, Forex Pipper, Tosin, Lowell, Roland, Artem, Ed, Voyager, welcome to LAR, Mauricio, Mr. Ego, Ron, Cyric, thanks for your looks today. Mark, Fab, Goldie, he's gone. Thank you, Goldie. Armand, great to see you. JM, Ron, always great to see you. Hassan, FX Video, Becton, Khalid, Tico, Abel, Duke, welcome to LAR. Jax, FX Praise, thanks for your looks. Jake, see everyone tomorrow for the ECB. I believe I'll be covering it live with Mauricio, Yohei, and Val. So stick around for the next interview, everyone. For the next program, there is someone behind me. Adinda, you too, Lowell. You're welcome, Sinatra. I love you guys. Remember, don't just count your pips, count your blessings. I'll see everyone tomorrow for the ECB. There you go. There's the ECB coverage, and Adinda's going to put up who's following this webinar right now. See you, Larians. Adios.